Welcome to today's deep dive into one of the most significant economic predictions of our time. Harry Dent's forecast for the biggest crash in history. This monumental event could reshape global financial systems, and in this video, I'll walk you through exactly how it could unfold and, most importantly, what you can do to protect your wealth and future. Dent, a renowned economist and author, believes that what's coming is not just another recession, but a complete reset of the economic order. Buckle up. This is going to be an eye-opening journey into the forces that are driving us toward a financial reckoning. To understand Dent's forecast for the future, we need to rewind to the last major economic collapse, the 2008 financial crisis. When the U.S. housing market collapsed, it triggered a cascade of financial failures that swept across the globe. Governments scrambled to intervene, pumping unprecedented amounts of money into the system to prevent a total collapse. Over the next decade, the U.S. alone injected an astounding $27 trillion into the economy. To put that into perspective, that's 1.5 times the size of the entire U.S. GDP. This money was split between two primary actions: deficit spending and monetary policies like quantitative easing. About $19 trillion was funneled directly into the economy through government spending, while the remaining $8 trillion went to inflating financial markets, particularly through the Federal Reserve buying up treasury bonds. This flood of money created what Dent calls a fake boom, a period of growth propped up not by real productivity, but by artificial means. Fast forward to 2020, and the COVID-19 pandemic hit the world like a lightning bolt. Once again, governments responded with massive stimulus packages, this time adding another $11 trillion in just 2 years. Dent argues that this was an overreaction to what should have been treated as a temporary crisis. The result? Inflation surged to 9%, far exceeding the typical 1% to 2% target. This wasn't a surprise to Dent. Injecting that much money into the economy was bound to cause inflationary pressures. The pandemic exposed a deeper issue. Governments have become too reliant on short-term fixes. Instead of allowing the economy to adjust naturally, they pumped in more money, kicking the can down the road. This intervention prolonged the artificial boom and delayed the inevitable crash. In response to the inflation surge, the Federal Reserve has raised interest rates by 525 basis points, marking the largest rate increase since 1981. But Dent warns that these aggressive hikes come with a dangerous lag effect. When the government pumps trillions into the economy, it takes time for the full impact to be felt. In this case, the lag effect could take up to 2 years before the real consequences hit. According to Dent, we're still in the calm before the storm. The economy has yet to fully digest the trillions of dollars that have been pumped into it. As the effects of the rate hikes materialize, he predicts that we'll start feeling the brunt of it by early to mid-next year. This delay gives a false sense of security, but the downturn is inevitable. Dent is betting on a full-blown recession hitting by next year, driven largely by the long lag from the stimulus and interest rate hikes. The scale of the stimulus is unprecedented, and the economy is taking longer to process the massive influx of money. Dent believes that by the time the effects fully play out, we'll be in a deep recession, potentially the worst since the Great Depression. The problem is bigger than just the U.S. government's debt, which currently stands at $35 trillion. It's the private debt that Dent is most concerned about. During boom periods, businesses take on large amounts of debt, but when the economy slows down, this debt becomes a heavy burden. While governments have the luxury of pushing off debt reduction, private companies must make tough decisions, cutting costs, laying off workers, and restructuring debt. Dent argues that private debt could be the catalyst for the next crisis. As businesses struggle to stay afloat, they'll be forced to become leaner and more efficient, eliminating inefficiencies and bad practices. This could lead to a wave of business failures, but also pave the way for renewal and growth once the dust settles. If you like this kind of video, go ahead and like, comment, and subscribe to stay updated with videos like this. Governments, on the other hand, are in a much tougher position. They can't simply slash spending without facing significant political backlash. While businesses can streamline operations and cut overhead, governments are often bogged down by bureaucracy and voter expectations. This limits their ability to react quickly to economic downturns. Dent refers to a famous quote from World War II: The US always does the right thing after trying everything else. He believes that governments will avoid making the tough decisions until they're left with no other option. This procrastination could make the crash even more severe when it finally arrives. Dent is highly critical of Keynesian economics, which promotes the idea that governments can print money to stimulate growth during downturns. He likens this to waving a magic wand, propping up the economy without addressing the real issues. The result is an inflated stock market that gives people a false sense of security, but just like any bubble, it can't last forever. He explains that recessions aren't enemies. They're a necessary part of the economic cycle. Healthy booms should be followed by healthy recessions, where bad debt is cleared out and businesses that aren't viable fail. Unfortunately, we've been in an artificially extended boom fueled by government stimulus, which means the coming recession will be much deeper and more painful than it would have been if we had allowed the economy to correct itself naturally. The law of diminishing returns will eventually catch up with us, Dent argues. The longer the bubble continues, the more it takes to sustain it. This current bubble, fueled by years of monetary stimulus, is already 2.5 times longer than typical stock market bubbles in modern history. No bubble can go on forever, and this one is overdue for a crash. Dent predicts that by the first quarter of next year, we'll be facing a severe recession. People will be left wondering how things went so wrong. The reality is that the warning signs have been there all along, but the bubble has been artificially prolonged. So what should investors do to protect themselves during this upcoming crash? Dent has a contrarian view. The traditional strategy of diversifying across various asset classes won't work during this unprecedented downturn. He argues that nearly all financial assets, including stocks, real estate, and even gold, will suffer significant losses during the crash. Instead, Dent advises focusing on a single historically proven safe haven: U.S. Treasury bonds. During times of deflation and economic slowdown, long-term Treasury bonds appreciate in value. Dent points out that during the 2008 financial crisis, Treasury bonds increased by nearly 50%. He expects similar, if not greater, returns during the upcoming recession. While many investors look to gold as a safe haven during economic turmoil, Dent disagrees. He believes that gold will not perform well during this downturn. In fact, he predicts that gold, currently trading around $2,500 per ounce, could drop to as low as $1,200 per ounce. This is because in a deflationary environment, all financial assets tend to lose value, gold included. Dent suggests that investors avoid gold during the crash, but consider it as a potential investment once the market bottoms out. He expects demand for gold to rise again, particularly driven by buyers in India once prices stabilize. Dent's ultimate advice is to prepare for what he calls the Great Reset, a once-in-a-lifetime economic event that occurs every 90 years. This reset, fueled by the bursting of major economic bubbles, will reshape the global financial landscape. For now, the best strategy is to avoid risky assets and focus on long-term U.S. Treasury bonds, which Dent believes will be the best performing asset during the downturn. Once the crash has played out, Dent advises shifting back into high-quality stocks and real estate, which will likely be available at deep discounts. He expects the millennial generation to drive the next economic boom, extending into the 2030s. But until then, the only safe place for your money is in U.S. Treasury bonds. In summary, Harry Dent's forecast for the biggest crash in history is a wake-up call for investors. The time to act is now. Move out of risky assets, protect your wealth, and prepare for the Great Reset that will redefine the global economy. If you follow Dent's strategy, you'll not only survive the downturn, but thrive in the economic recovery that follows. That's Harry Dent's bold prediction for the future of the global economy. The coming crash is inevitable, but with the right strategy, you can protect yourself and even emerge stronger. If you enjoyed this, don't forget to like, comment, and subscribe. Your support means the world, and it helps us keep bringing you more great content. Plus, I'd love to hear your thoughts. Drop a comment below.